General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. Seasonality low for NASDAQ, January, February, high December. This is the 29-year seasonality. In the last 15 years, did the same thing as well. Q1 in February, let me get the cover. We'll keep that. Week 1, get the cover here too. So bullish sentiment went down. Let's space this out. Bullish sentiment went down as well as cash on the side. And bearish sentiment went up. Week 1 things, NFP week. So Monday through Wednesday should give us textbook delivery just based on news. And Thursday going into Friday news could give us chop. I always do Thursday with the R. Nobody spell check don't like that for some reason. CME Fed Watch. We got no change in the Fed Watch. No change in the Fed Watch. No change in the Fed Watch. As long as it's no change. No change. Yeah. As long as it's no change, we could chop. I'm thinking as soon as economic data is suggesting we can cut rates, we will see the market reprice higher. Top 10 only. The focus for me is top 10. Everything else is sentiment. So top 10, we have Google and Amazon. So Google's Tuesday after market, Amazon's Thursday after market. And Amazon Thursday after market. So we got good volatility, good earnings. Commitment of traders. We got commercial selling. Hold on. And over here, let's just give us the more numbers. The open interest on loans are way more than the open interest on. Hold on, wait. For each trade, yeah. Open interest on short is higher. So the open interest on short is higher. The commercials on short is higher. Cool mirror. 12-month is in the sale. So this is important. So net long, net short on the COT hedging program. And open interest is rising. So this is looking like price will seek fair value. We can set up swings. Yeah, it looks good. I like it. Monthly order flow is bullish. If we do reaccumulate, I would love to see the monthly order block traded to. From the weekly perspective, I'm watching this weekly wick. That's a long wick on the weekly. I'm watching this weekly wick. Nope. Market open today. We will see the initial reaction to the Trump tariffs. They started yesterday. Started on Saturday. So the market open today. Could be a big move. We still have the inefficiency or the new week opening gap from the weekly perspective. That still needs a body. A weekly body. Filling on lower time frames. Doesn't excite me. No, we're still in this larger range. No, we are still in this weekly dealing range. Yeah. Still in this range, which is previous quarter, which is interesting as well. Daily, know how the Monday candle body is still housing all the price action of the bodies from previous week. Large range accumulation. See this. Respected this week too. Interesting enough. From the H4 perspective, we filled this with bodies. We sold off. These are some large displacement candles. Have internal range liquidity here. And this is low resistance because it's really no stop hunts. You could say this is a stop hunt, but we have a 4-hour order block here. That's what I would be looking at. Lower prices to start the week. Weekly objective. Let me go up here. I still like these highs here. Like dealing range logic. Okay, let's see. Buy side, sell side, retracements lower. This really is 50-50. 50-50 to me as far as direction from the weekly perspective. No weekly objective. Set in stone. I can see a run of equal highs. Or DR logic. And we just run the lows. So, not super convinced by this weekly chart. Because this is dealing range. High, buy side, sell side, retrace, maybe OTE or something, then lower. And I can see price pushing down maybe a quarter into this wick gap and coming up to clear this, feel this inefficiency and take out those equal highs. So that's 50-50 to me. It's not, oh, this is definitely going to happen, especially with the news and stuff. Monday, this is just sideways to me. Here, I can see lower prices to start the week just based on these candle body sizes. We had all those earnings last week and the market said we didn't care. And internal range liquidity is here. So even just looking at this as a range, sweeping both sides, maybe snapping back to the middle, I can kind of see that. Lower prices to start the week based on the displacement from Friday. Internal range liquidity does look good to sweep last week, Wednesday. and stay low. As long as we in this range, kind of this dealing range, this is EQ. We could be like high, boom, low, boom. We could just keep coming back into this range. We could be playing a large range consolidation, which is cool, but it would negate weekly objectives if we're just going to sit here. But lower prices to start the week makes sense based on displacement. Internal range liquidity does look good. It's a sweep last week, Wednesday's low. Yeah. H1. Retracements and lower prices. Lower prices. Seem like the approach to Monday. Question I have is, will this week set up the low or set up the fair value swing for the year? NFP and earnings data and Trump effect. Lots of things to consider there. We're looking at, especially if you trade NASDAQ, we look at a lot. Currency people just have a life of peace with interest rates and economic data. We got politics, all kind of stuff. Earnings. All right, that's that on that. Y'all have a good day. Peace.